Okay, Eugene, Key Executive Officer, ERA, and Darren,
Hi.
Big Boss and Division Director.
Okay.
Okay, today we want to talk about interest rates.
Yeah.
Because, right, I just checked with OCBC, they say I can quote around 1.7%.
End user.
End user lah.
Okay.
That means you borrow
at 1.7%.
1.7% lah. But look like daily coming down lah.
Yeah. And that
Right?
is quite
I mean, like
fluid.
last month, I
Yeah,
quoted 1.8, 1.9,
Yeah.
now suddenly become 1.7.
Yes.
Right, which is quite good. Then I also looked at the SORA.
Yeah.
Because of course interest rates are related to SORA, right?
Right.
The interbank, whatever.
Yeah,
correct.
Then over the past 4-5 years, right, I look at the DBS SORA chart, right? In this year, from January 3.3%, the SORA, now September is
Half.
1.5%.
Half.
Wow.
Half in 1 year.
Half.
Wow.
Yeah.
Not even 1 year, man. 9 months.
Half.
Correct.
Yeah.
When last 2 years, right, is 3.6, 3.7%. Then before that, in 2022, it went from 0.1%, 0.1% to 2.9% in the year 2022. So it shot up to nearly 3%.
Yeah.
Stay at 3% plus, and this year come down to half.
And coming down some more.
Correct.
Yeah.
So interest rate is something that I like to talk to my clients about.
Yeah.
Borrowing costs, right? Your feeling about interest rates shifting, because we really want to talk about prices of property.
Yes.
Right? We have HDB, because HDB can borrow from bank,
Yes.
then we have private,
Private.
new launch, private resale, landed property, the quantum very big. Do you think that, first of all, sellers in the market, knowing that you're going to pay less interest rate, and which means that instead of paying 5,000 per month, maybe you pay 4,000, 3,008. Do you think the market will call for higher price for property? That's my first question. Will the prices see some upside?
So, very short answer to that is that when interest rates are lower,
Yes.
more buyers will enter the market because
Okay.
can
Yes.
take cheaper loan mah.
I don't
Right.
see it yet.
Not yet.
No,
Right.
I'm seeing
Oh, you
it.
see
Yeah,
it?
not
Okay,
yet.
okay.
Progressively
Yeah,
lah.
I'm
So
seeing
when
it,
more
yeah.
buyers enter the market, it
Yeah.
means demand increase, right? So demand increase, prices will go up.
Yes.
You got more people competing for the same property.
Yes. Of course, we are looking at the three segments. For me, I look at HDB resale, private resale, and then landed lah.
Yeah.
Of course, new launch, we don't talk lah.
Oh, no, you must see that when interest rate drops, right? Out of the three markets you're looking at, the most evident or the ones that benefit most is the one with the higher quantum, right? So
Yeah.
that's the landed market.
Correct.
So in the past, it has happened before. It's happened a couple of times. Interest rate drops to near zero.
Yes.
The market that moves first is always the landed property. Why? Because the client is the one that benefits the most. They are the one that borrows money. You see, and very interestingly, is this. If you are a high net worth client, you have a landed property. Most of the time, you have money parked elsewhere.
Yeah.
Okay, so when interest rate drops, right? I keep it very simple. Your FDs also drop. Your other investments. Basically, your money is not working very good.
Nope.
Yeah. Okay.
Yeah.
So I've instances where the bankers come and tell me, forget it, just take out the money, we do something with it, because I can't give you that kind of. And where does the money flow to? Flows to property.
That's true. I mean, of course, you are talking about someone who has extra funds,
Correct.
and the funds are not working for them,
Correct.
and they play safe lah.
Can't even be inflation.
Yeah, correct. I mean,
So
you're
you
talking
buy
about
something to
safe
hedge
players
against
lah,
inflation,
safe
right?
players,
Yeah.
Safe players we're talking about,
Yeah.
not the crazy
Yeah.
risk-taking ones.
Yeah.
It's true, your money must work for you lah.
Correct. So if it doesn't work for you, it goes to property, right?
Correct,
So property,
correct.
then you just buy as big as you can,
Yes.
etc. You buy another lender, whatever, upgrade,
Yeah.
So that in turn will pull up everything. So every time when interest rate goes down, lender is the first to run.
Yeah lah.
And then
I
along the
understand.
way, you'll pull everything up.
I can understand.
Along the way.
I give you an example lah. Let's say today, based on the TDSR calculation,
Yeah.
of course we still use MAS still use the 4%.
Correct.
Interest rate to
Yeah.
calculate the
That one will
TDSR.
not change. That's more
haven't
for
changed yet lah.
prudence.
Haven't changed yet. But the actual interest rate is less than
Less,
half of that,
yeah.
right? So
Less.
someone who has a budget, TDSR budget of 10,000 per month.
Yeah,
But actual budget based on actual loan,
2,000 less. Yeah,
no, it will be more.
I think more, maybe.
More, maybe 12,000 lah. Because actual 1.7 ma. But your cut-off calculation is 4% ma. Right? So
Could be.
So I can MAS ruling say I can pay 10,000,
Yeah.
but actual calculation
You can borrow
I can
more.
borrow more lah.
Yeah.
Right? So from I target buy a 4-room.
No,
blah, blah, blah.
I correct that.
Ah,
Not
Actually,
say
the
you
other
can
way,
borrow more.
ah.
The amount of money you can borrow is based on the MAS stipulated calculation,
so that's
which
the
is
cut-off already.
the cut-off rate.
Just
So
that
the
your-
amount you can borrow, you cannot
your-
borrow more.
your
Okay.
But your
installment is
actual
less.
installment is less.
Installment
Actual
is
installment is less than what they
they have
calculated.
shown.
Okay,
So there's a
okay.
buffer there. That buffer is deliberate in order that you are able to
Financial
buffer the loan,
prudence.
financial
You are safe
prudence
lah,
in
you
the
are
event
safe.
interest rate goes up.
Okay.
So it's for your safety.
Okay, good.
that
So
this
we
calculation
clarified that.
states that.
We clarified
Yeah.
that. So what I'm trying to say is someone who has a budget of, let's say today the family has a budget of 10,000 to buy something,
Yeah.
without looking at TDSR calculation. Okay?
Okay.
Then now for 10,000, last time they can buy, maybe they can take a loan of 2 million, let's say. Now with the same 10,000, they can take higher loan.
Not
Because
necessarily.
Because
No.
interest rate went down, ma.
Still based on your TDS.
No.
Still-
I'm saying let's
Just
say you're
affordability,
let's say
well.
no, let's say you're within the TDSR.
Okay.
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 Then
Yeah,
yes.
you're within the TDSR.
Yeah, okay,
Yes,
fine,
yes,
fine,
yes.
fine. Then-
Based on
then-
your
yes,
lifestyle
yes.
needs.
Then that's correct.
That's correct, yeah.
Correct. So I can
Correct.
borrow
Yeah.
more,
Yeah.
which means what I look for also will be different. Ma. I can be from
Yes,
from
true.
3 room, I
Yes,
look
you
for
have
a
more
4 room,
options now.
more
True.
options.
Yeah.
So you're right lah. I mean,
True.
landed may be an option for a newer segment of people,
Correct.
right?
Suddenly I can afford already, no?
Yes.
Correct.
Yeah.
So we can expect the bigger quantum properties to expect a higher selling price
Yes.
if the demand goes up.
Actually, when you mention something like this, it also reminds me of the last time it happened.
Yes.
You know, in the past when it's very common, you know, if I stay in a condo today and I want to upgrade, there's a lot of instances where these people, I stay in a 3-bedroom condo, I want to go to a 4-bedroom condo,
Yes.
or change location.
Yes.
But because of the interest rate, because of the drop in interest rate,
Yeah.
affordability, not only can they change location, they can change asset class.
Correct.
So,
Landed.
so that was very interesting, you know.
Yes.
So suddenly I can afford a piece of
Yes.
land, and then if I don't jump now, when interest rates are low, what do I wait for? You
So
see?
the same goes for someone who wants to buy, let's say, a newer HDB for 1.2 million. They might decide, maybe I take a bit more loan, I buy condo.
True. So that's where this thing called FOMO come in, fear of missing out, right? Yeah. If I don't buy now, when,
Yeah,
right?
when will I buy? Yeah,
and these people all very
yeah,
positive,
correct,
and
correct,
interest
correct.
rate, you know,
Go down, you buy.
and they think the interest rate will be low forever.
Yes,
you know?
yes,
So
yes.
this has
So
always happened.
window of
Opportunity.
opportunity.
Correct.
Yes.
You don't
Yeah.
grab it now, that's
Yeah.
it.
Yes.
Yeah.
So it's quite clear that when interest rates come down and
Yeah.
the so-called affordability goes up,
Yeah.
of course we are still within the TDSR.
Okay.
Yes.
Right? And the affordability goes up for
Okay.
the family.
Yeah.
Right? They can buy something
Options. Yeah.
more options.
Yeah,
So as a seller in the market, right, when I see demand go up,
A price
I will up my price.
Yes.
Is can I say that?
I disagree. It depends. It really depends. Okay, why?
Why?
Why? Okay, very simple. Sometimes my property could be stuck for a long time, you know. So instead of upping price, it's an opportunity to exit.
To exit. Okay.
Yeah.
So you're talking about what kind of property you have.
Depends.
Correct. It's
Depends
very
lah,
dependent.
depends lah.
Yeah,
Okay,
it's very
so-
dependent. If I up price, everybody don't up price, then I
Yes.
help everybody sell.
So we take
also
away
don't
the
want, right?
so generally I take away the two corners.
Yeah.
The one corner is the one that cannot sell one.
Yeah.
You remove that one.
Yeah.
Then the other corner is sure sell one.
Yeah.
That one also remove. You
Yeah.
look at the middle block.
Yeah.
The average property.
Yeah.
Okay.
Yeah.
I still expect it won't happen overnight. But I still expect like what Eugene said. When you smell the demand going up,
Yeah.
You will go up. You'll be
That's why
surprised.
you go
up. Yeah, yeah.
Definitely. that's
Because
different.
there will be more people coming to view your property.
that's true.
Yeah, because there are more buyers in the market.
So wait,
So
so if
this
you're talking
gives you
about
that
a target
feeling.
area, right? You see this group of people selling, right? Let's say you got 4 or 5 sellers selling, all selling at say 3 million. I can bet your last dollar, the next person that come in and want to sell their property will be at 3.2,
Higher.
3.3. Yeah.
Mm.
It always happens,
It's so- you
especially
set a
the
new
low
benchmark
interest
lah.
rate. Yeah,
Yes.
yeah, yeah.
Of course, then we go back to the standard things that we look at, like how many transactions in the area, the price growth, and so on. They will drive
Yeah.
price better lah.
Yeah.
Okay.
So this is actually to address that a very common question that we all have. Now the interest is 1.7. It is going to trend downwards.
Yeah.
We think.
It will.
A lot of people
everything
is
looks
quite
like-
positive.
At least for the immediate
very,
future.
Correct,
very,
okay.
very.
Yeah.
There is a quite strong possibility that it will
Yeah.
trend further downstream.
Mhm.
Should I come in now or should I wait for the interest to go down some more and then buy? Right? So our point is that if the interest rate further downstream drops about, there will be a lot more buyers coming in, right?
Yeah.
Wow, if the interest rate drop 1.2%,
Yeah.
your price will go up.
The
leh.
price will go up.
Yeah.
So
Buy when you can.
So
Buy now
yeah,
lah.
buy now.
Buy when you can.
And you can always reprice your loan further downstream.
Yeah.
Right?
Yeah.
Yeah.
I mean, you see, the thing is, like what Warren Buffett say or somebody say lah. When everybody's scared to buy, that's when you should go in.
Yeah.
When everybody crazy and going in to buy, it's not the right time.
I
to
think
buy.
interest rate at 1.7 and if you extrapolate, let's say in future is maybe 1.2, 1.3,
Let's say lah.
the differential is very marginal. So your money installment is not much difference.
Yes. Can
Not
be
much
like
difference.
10, like 10%.
Yeah, not much difference. Yeah.
We
But
have to do the maths. Yeah.
if you wait till later and buy, your
capital
price,
price.
your capital price that
Can
you
go
have
up
to
quite
pay
a
for
lot.
a price can go up quite significantly.
No, like for example, lender, you play a waiting game on lender. Wow, the quantum go up. can be
Yes.
Quite serious.
So
You can't wait.
the larger the quantum of the
Mm.
property,
Mm.
the more headroom
yes.
there is for price to go up when
And
the
also
demand
for
increases.
also for high demand locations
Yeah.
like next to MRT, whether it's resale or HDB resale or private. I think like next to MRT, next to nodes, next to transformation,
Yeah.
you can expect a higher spike.
Yes, you will.
Generally lah.
In terms of
Right.
quantity,
Yes,
that means you have more transactions.
Yes.
But in terms of pricing, the landed, the difference is crazy.
Lender is crazy lah. I
It's
serve
crazy.
one
Your-
buyer
your
1
installment,
year
difference
from
of
5 million
5,000,
plus,
okay?
6 million plus.
Yeah,
right?
Yeah.
of course.
So you wait 1 year, you pay 1 million more.
Of course.
It can happen one. Don't play.
Yeah.
So the whole interest rate story now is,
Mm.
and I wanted to do it in September now,
Mm.
rather than wait, is because I think I expect my clients to be informed lah that
Mm.
we can expect the market to call for a higher price.
Mm-hmm.
It's quite understood.
Yes.
Yeah. So let's not bluff ourselves lah.
Yeah.
That the prices are going to remain same. And plus, yesterday, Minister Gunn already said they are targeting 3 to 4% growth for the economy over the next. They're going to try lah.
Yeah.
Hey, 3 to 4% growth is unheard of in the past
It's
few
a
years.
push.
It's a
a
hard
push
push.
growth. Yeah.
So if I have extra money, like you said,
Mm.
funds, and you think stock market is not for you,
Mhm.
fixed D is not for you, T-bill not for you, anything not for you,
Mhm.
I think a property purchase makes sense. If you have the name to buy a property without ABSD. Yeah, and then collect rent and see what happens.
True.
Right? So the conclusion is interest rates coming down. We expect in a place like Singapore, the land is scarce, properties are scarce, population
Yeah.
is increasing.
Yeah.
We expect prices to be going up.
Mm.
So
So if you can enter the market now,
do it.
do it.
You
Yeah.
should.
Yeah, because
Yeah.
later when interest rate
Mhm.
drop some more by a little bit only, even more buyers will enter the market.
And the market
Yeah.
will start running.
And
Yeah, lah.
Yeah.
And then we've seen it lah. We've seen it.
Mm.
So it's just our honest opinion,
Mm.
right? Of course, prudency is
Yeah.
financial
Mm.
prudency very important.
Mm.
Don't overstretch and buy something you shouldn't be buying,
Mm.
right? Keep
Yes.
within your budget. Keep safe funds.
don't worry,
for-
the banks are still playing it very safe because
Yeah.
they still have to calculate
The
based on
TDSR is still there.
You also must have
NAS
savings.
approved.
I always tell my client, you
Mm.
must have savings to cover your mortgage for at least 6 months to 18 months.
Yeah.
Better lah. 18 months even better lah.
Yes, the more buffer the better.
Safety lah. Yeah.
Mm.
Otherwise, buy now. Right?
But you have a lot of clients FOMO I don't buy now, no chance so all the
better buy,
savings all
better
gone
buy,
already,
yeah,
I just buy
buy
now.
big, buy big.
You will have a lot of
yeah,
this. Yeah.
Okay, so talk to your agent. So interest
Yeah.
rates are coming down. We expect prices to to go up as well. Yeah. Okay. Good. Thank you.
Thank you.
Thank you.